Hello and welcome to MarketSquare, your go-to show for deep insights into business and economic trends. I'm Olaitan Adebayo, and today we are diving into key developments across Nigeria. Stay with us as we break it all down. Welcome back to MarketSquare. Let's get straight into it. The Central Bank of Nigeria has once again issued a stern warning to the public about the proliferation of fraudulent schemes, falsely claiming affiliation with the bank. Despite a prior advisory released on November 18, 2024, these deceptive activities persist, targeting unsuspecting individuals with promise of false contracts, grants, and intervention funds. In a recent statement signed by Mrs. Akama Sidi Ali, the Acting General of Corporate Communications, the CBN emphasized that it has not authorized, licensed, or appointed any individual, group, or organization to act as an agent or intermediary in offering such financial services to the public. The bank also clarified that it does not endorse or support these claims in any form. The CBN reaffirmed that it does not award contracts or disburse funds through unsolicited communications, such as emails, phone calls, SMS, WhatsApp messages, or any social media platforms. Members of the public are strongly advised not to engage with individuals or entities making such claims. Instead, any such incident should be reported immediately to the relevant law enforcement agencies or the nearest CBN branch. Now, here is why this message is so important to the every Nigerians. It helps protect vulnerable individuals from being exploited during tough economic times. Many citizens are looking for support, whether it is to grow their business or simply to survive, and scammers know this. The CBN message is a lifeline, urging caution before anyone parts with their money or personal information. This warning strengthens trust in the financial system. When a regulatory body like the CBN openly distances itself from fraudulent schemes, it reassures the public that there is a clear line between legitimate economic governance and criminal manipulation. But most importantly, tackling financial fraud boosts the economy. Every scam that succeeds drains resources from hardworking Nigerians and undermines faith in formal banking. The more confidence people have in the financial system, the more likely they are to save, invest, and engage with financial institutions, driving long-term economic stability and growth. The Central Bank of Nigeria remains committed to safeguarding the financial interests of Nigerians and continue to collaborate with securities agencies to investigate and address these fraudulent activities. The bank urges everyone to remain vigilant and rely on information disseminated through its official channels to avoid falling victim to such deceptive practices. In a related development on government finances, the Debt Management Office is aiming to raise 300 billion naira through a new Sukuk Bond issuance. The bond is aimed at funding critical infrastructure projects across the country. This marks the highest issuance since the Sukuk program began in 2017, which has so far raised over 1.09 trillion naira, primarily used for road constructions and rehabilitation projects nationwide. The proceeds from the Series 7 Sukuk are allocated specifically for the development and restoration of critical roads and bridges across Nigeria's 6 geopolitical zones and the Federal Capital Territory. This investment is set to improve nationwide connectivity, reduce travel time, and enhance road safety. These infrastructure upgrades are expected to facilitate economic activities, promote regional integration, and provide easier access to education, healthcare, markets, and particularly in rural farmers and remote communities. Beyond its infrastructure benefits, the Sukuk initiative has significant economic implications. The rollout of this project is expected to stimulate job creation in the construction sector and related industries, offering employment opportunities that support livelihoods and reduce poverty. These injections of activity into local economies is a crucial driver of inclusive growth. One of the standout features of the Sukuk bond is its tax efficiencies. It qualifies as a government security under both the company income tax and the personal income tax, offering tax exemptions for investors. This makes it an attractive option, especially for institutional investors seeking compliant and cost-effective instruments. The bond is classified as a liquid asset by the Central Bank of Nigeria and qualifies as a security in which trustees can invest under the Trustees Investment Act. This classification increases its credibility and attractiveness within the Nigerian financial ecosystem. The bond is set to be listed on both the Nigerian Exchange Limited and the FMDQ Securities Exchange, reinforcing its transparency and ensuring tradability and liquidity in the secondary markets. These features help to attract a broader range of investors while promoting market confidence. These Sukuk bonds are backed by the full faith and credit of the federal government of Nigeria, making them a low-risk investment opportunity. This backing reassures both retail and institutional investors of the security and reliability of the instruments. From a broader perspective, this Sukuk Sharia compliant structure also appeals to the ethical investors and contributes to financial inclusion by attracting participants who might typically be excluded from conventional investment opportunities. It broadens the investor base and allows more Nigerians to participate in financing national development. The Sukuk issuance contributes to deepening of Nigeria's domestic capital market. By offering alternative investment options, it encourages both savings and long-term investments, thereby boosting the strength and diversity of the country's financial ecosystem. Director General of the DMO, Patience Onia, also emphasized the bond's role in promoting financial inclusion and developing Nigeria's capital market. She noted that the instrument's structure and benefits aligns with investor expectations, qualifying it as a secure and strategic investment choice. The benefits of these initiatives are wide-reaching, from reduced travel time and safer road to job creation, increased access to markets for rural farmers, and better availability of education and healthcare services. The 300 billion naira Series 7 sovereign Sukuk is more than just a bond. It is a strategic tool for national transformation. On a global front, African Export-Import Bank says Africa will feel minimal impact from shifting trade dynamics between the US and China. According to the recent analysis by African Export-Import Bank research, the continent's limited trade exposure to these two economic giants, 5% with the US and 12% with the China, suggests that the immediate impact on African economies is likely to be minimal. The bank noted that Africa's combined trade exposure to the US and China stands at just 17%. Africa exports more goods to the United Arab Emirates than it does to the United States, underscoring the continent's increasingly diversified and regionally integrated trade profile, contrary to the perception of overdependence on major world economies. The bank also pointed that only 11 African countries face US tariffs above 20%. Even among those, just 2 nations export more than 10% of their goods to the American market. According to the bank, key exports such as oil, minerals, and agricultural products are generally exempt from punitive tariffs. It added that over 80% of African nations send less than 5% of their exports to the US, further limiting potential fallout. For countries that do not have higher exposure to the US market, many have viable alternatives, regional trade partners, South-South trade agreements, and commodity diversification strategies, which help them pivot without major economic shocks. While tariffs represent a supply chain adjustment rather than a collapse in global demand, the bank notes that both the US and China will continue to require the goods they did pre-tariffs, but may source them differently, opening space for alternative suppliers. This scenario presents opportunity for African countries to fill in the gap left by shifting trade patterns, particularly in supplying raw materials for global production chains. African raw material used in global production chains remain relevant. What may shift is not the market, but the route to it. Many African exports possess structural or security dimensions that makes their demand relatively inelastic. This includes resources essential to global industries, which remain in demand irrespective of geopolitical tensions or tariff adjustments. Beyond trade flows, the bank highlights that Africa's macroeconomic landscape in 2025 offers cause for cautious optimism. Several countries have entered the year with stronger fundamentals, slow inflation, signs of fiscal discipline, improved credit ratings, and renewed access to global capital markets. This economic stability is being reinforced by the steady momentum of intra-African trade, particularly under frameworks such as African Continental Free Trade Area, which is beginning to fortify internal resilience across the continent. Multilateral African financial institutions led by the bank itself have played a pivotal role in cushioning African economies from external shocks. Their continued support in 2025 is expected to be instrumental in navigating any ripple effects stemming from a shifting US-China trade relationship. While the US-China trade tensions continue to reshape global economic landscapes, Africa's diversified trade relationships, structural economic reforms, proactive financial strategies position the continent to not only withstand potential shocks, but also to seize emerging opportunities in the evolving global trade environment. Let's take a quick break, and when we return, we'll dive into latest developments in Nigeria's external reserves and what they mean for the naira. Welcome back to MarketSquare. Before the break, we looked at an African's position in the global trade dynamics. Now let's turn our focus to the currency front. Nigeria's external reserves have declined to an 8-month low of $37.9 billion as of April 2025, primarily due to foreign debt servicing and the Central Bank of Nigeria intervention in the foreign exchange market to stabilize the naira. Despite this downturn, early May data indicates a modest recovery, with reserves increasing by an estimated $163 million by May 6, 2025. Analysts caution that external factors such as volatile oil practices, OPEC plus supply decisions, and global inflation pressures continues to pose risks to Nigerian reserves levels. The CBN remains committed to maintaining market stability and has emphasized transparency and resilience in its monetary policy. That's it for today on MarketSquare. From the warning signs in the financial sector to the state of Nigerians' reserves, I'm Olaitan Adebayo. Thank you for watching and see you next time.